Hey my friend, welcome back to another video. I just got married, so I gotta make some money for me and my wife, and my goal is to help you make some money for you and your wife. And if you're single, you're gonna make some money for your future wife. There we go. Before we get started, this is not financial advice. I'm just a guy on YouTube, and this video is for educational and entertainment purposes only. And one more quick housekeeping. Just want to invite you to join the school community. There's going to be a link in a pinned comment, and that's a place where you can get live trading calls, basically in real time access to me, ask me questions anytime, and I get back to you as soon as I can, kind of answering questions, or maybe some, you need another perspective on the market, what's happening. And also we have like a full community of active people in the community, also helping each other and basically growing and trying to help us all make money together. And it's a really nice active community. And yeah, so the link is in the pinned comment. It's 19 bucks a month. And basically, yeah, that gives you live trading calls and a lot of access to me. And right now in development is a full course that's going to be exclusive for the community. So that's going to be rolled out somewhat soon. Hey guys, it's me from the not so distant future. I forgot to mention that there is a 7-day free trial if you hit the link in the pinned comment to join the community. So before you have any money on the line, you could join us for live trading calls, interact with some of the community members, which are all very friendly. And yeah, so do that. 7 days, no money on the line. I think that's a great option for you so you can get your feet wet, see if it's a great fit. And yeah, and if you don't like it, no reason, no harm, no foul, no questions asked. Just feel free to cancel, and that's it. Life goes on. So yeah, that's an option for you. Okay, back to the video. All right, so looking at the portfolio, let's take a look. If year-to-date return right around 60%, and the 1 year right about at 100. We took a slight dip today, but that's okay. As option sellers, we are chilling. We are chilling. Okay, so today we're going to talk about credit spreads, put credit spreads specifically. And the reason is because I have 2 put credit spreads on AMD expiring tomorrow. So 9/5, September 5th. This video will be out on September 5th, so we'll see what happens tomorrow. Okay, so I opened this position on August 15th. I got a $60 credit per contract, so 120 bucks for 2 contracts. 160 strike price. Now, if we take a look at AMD's chart, we sold this August 15th, right when AMD was around 177, 180, something like that, right? So went all the way down, put credit spread to 160 strike, and right now we're basically in the second most unideal position, right? The first most unideal position is that basically the stock price, it just shoots way below the 155, and then we lose our whole $500 spread. On 2 contracts, that would be $1,000, okay? So the reason why I hate put credit spreads actually is because it's not worth the anxiety most times, It can be a very powerful tool. I still use them, but they're more on the degenerate side of the option seller, world, right? A little more on the degenerate side because you can actually lose your money. And what's the number 1 rule of investing? Don't lose money. Okay. So we're going to see, now we're not gambling, right? We have a system. So we look at our spread, and we're not going to go, well, I'll make a separate video on the ins and outs of put credit spreads and different risks associated with that. We're going to get more into those details, but right now we're in another video. But right now we're just going to go and see, what do we do when this happens? What do we do when expiration's approaching? We're basically right at the money at that 160 sold put price. Right? What do we do? Do we want to keep it and hold it through expiration? Do we want to expire? Do we want to take that gamble? What if tomorrow opens really red? What do we want to do? Okay. So essentially on this position, my total return is negative 122. Not ideal, right? Now tomorrow, what happens if I go to simulate my returns? if it stays right around this price, I'm going to be profitable, but I got to wait. I got to wait till tomorrow to really see what's going to happen. I don't know if I'd rather err on the side of caution for something like this. I would hate for this to be 156 tomorrow for whatever reason. Short term, anything can happen, right? The long term, we can be totally right. But with put credit spreads, you got to be right in the short term as well, which is a little bit annoying and why I don't like to use them. And if I do use them, it's a very small position size. So what we're going to do is we're going to roll. We're going to roll this position. And I'm still going to, I'm going to have some skin in the game with this, but we're going to roll it. So let me explain what happens. So rolling, don't get confused with rolling, okay? Rolling is very simple once you understand what it actually is. Basically, rolling is you're closing a position and then you're opening that same position for a later date, usually, to kind of save that trade. So right now, total return on the two contracts, negative 122, okay? So what we're going to do is we're going to close this position, two of them, okay? We're going to close it. So our estimated cost is going to be, let's see here, 240, okay? 240, remember that number, okay? 240, we're gonna, man, do we want to close this? Let's see, hold on, let me just think this through real quick. Okay, if we do nothing, you know what, let's roll it. What am I doing? Okay, what am I thinking? Okay, so this is what we're going to do. So we're going to do 120, two contracts. Yeah, back to it. Okay, this is what happens. These are the emotions that happen when you're selling puts, when you're doing spreads. This is part of the process. Okay. Yeah, expires tomorrow. We could take that gamble, right? But we're here for a long time, not a good time. Okay. So let's see here. We're going to close this. Put credit spread. Estimated cost. Remember, we got paid $120 up front, so we're not actually losing this 240, right? We're losing the difference. Technically, we're losing the difference of we're paying now 240, but we got paid 120, so we're really down about 120. Remember that number. Submit. So, and we're releasing $1,000 of collateral. Okay, watch this. So, let's see what's happening. Why is this not filling? Okay, we're gonna replace order. Sometimes that happens, guys. Let's see. Let's go 119. Close. Okay, 118. Oh, wait, I have to go higher. Hold on. 120. Let's say 120. I don't know. 240, even. Boom. That should be good. What is happening? What is happening? Oh, it keeps jumping. All right, let's see here. Okay. 121. Let's see what happens. Okay, submit. Come on. Got it. All right, the hands work. Guys. Hands are powerful. Okay, 242. Okay, remember that. 242 minus the 120 that I got paid originally for putting on the trade. Now, watch this. So essentially, we're rolling. We don't have the position. When we do a put credit spread, we have to do a manual roll. That's essentially what it is. We're going back to AMD. Now, we're going to go lower in strike price. And we're going to expand this out. Okay? So, I'm going to go to the 26th. Okay? And what we're going to do, watch this. Sell put 150. Buy put. We're going to go down 5 to make the spread $500. So this is $5 difference times 100 because 100 shares, okay? So total credit, let's see, is 87 bucks, okay? Let's see, do we want to do that? Do we want to do 87? Let's see, 370 minus that. You know what? We might not want to go down 10. Let's go down 5. Let's see what happens if we go down 5. So we'll do the 155, 150. Okay, look at that. Total credit. Oh, that's for one contract. You know what? Okay, hold on, guys. Hold the phone. In my mind, I was thinking for one contract, and we wouldn't be making all our money back. But look at this. 150. So we sold the put for September 26, 150. Now we're going to go to the buy side. Check this out. Hold on. 145, okay? So total credit for that one contract is 86. But we're going to do 2 contracts because we closed 2. We're going to roll 2. Estimated credit. Okay. Let's see here. Okay. So. Yep, that's perfect. You know what? Man, this is part of it. This is part of it. I'm thinking we go to the 155. I'm thinking we go to the 155. Let's do it. 155. We'll go to the buy put side. We'll go to 150. Yeah. Let's do it. 2 contracts. Okay. So now look at this. Oof. Yeah, let's do it. Okay. Let's say 37. Let's try that. Oh. Ah. You know what? Oh my goodness. Yeah, no. We'll go. Okay. You know what? My gut is saying 150. Let's do the 150. This is annoying. I'm a mess right now, guys. I'm a mess. Okay. High pressure situation, guys. Okay, 150. Let's do the 150. There's really no right or wrong answer. It's really just how much risk do we want to take, right? How much risk do we want to take? So we're going to go to the 145. 150, 145. I'm going to err on way more side of caution. Yeah. Yeah. Okay. 150 final offer. Okay. Oops. So we're going to do the buy side. Sold 150, buy 145. $87 credit. Times 2 contracts. So remember, we paid about $240. Right here, we're going to get a credit of about 180-ish, right? So, 240 minus 180, that's a loss of 60 bucks. But my original contract, I sold, we got 120 for it. So we're actually still positive 60 bucks. And we have dramatically less risk because we rolled it down 10, okay? So we're extending the time. We're getting a lot more theta for this spread. I'm going to execute the trade. Oh, no, went to 91. Let's see if we fill. Let's do 90 or 89. Let's see 89. Let's see if that works. Okay. Whew, there we go. All right, there it is. So now we basically have a new position that we saved. And this is why I hate put credit spreads. I'm not sure if I'm going to edit out all that part or if I'm just going to leave it in and, you guys can watch me just struggle mentally, going back and forth, right? Those are the emotions, right? Those are the emotions you kind of go through. You're weighing out different possibilities, what's going to happen. The reason I wanted to go on the side of caution more is because we have the September rate cut, FOMC meetings, all this stuff. There could be a lot more volatility in the market, a little more unknown. So I'm going to go more on the side of caution, okay? So I'm still up on the position, and we have a lot less risk now because that AMD position is not 160 strike, it's 150. Now, the other side of the coin is I could have just waited maybe till tomorrow, but then that would have been a little bit more of a gamble, okay? And with a position like this, I really don't want to risk money that I could actually lose. Of course, I want to think that everything's going to be okay and it'll be above 160 tomorrow and I can just close it out. But when it's this close, put credit spreads are just kind of dangerous territory, right? Because we don't want to lose money. We got wives, we got wives. We can't be losing money like that. You know what I mean? I'm just kidding. Okay. And yeah, that's pretty much it. So you guys saw me successfully roll that put credit spread. We're chilling, Now, if that was a cash secured put, I'd just take assignment, worst case, and you just get the shares and you run the wheel and life is good. That's why I hate put credit spreads, but also they're powerful because once that trade works out, the 150, if it works out, then we just do another put credit spread, maybe keep position sizing low. And for the amount of capital you're putting up, it's a pretty decent return. Just sometimes you got to manage. Really, it's better for smaller accounts or, again, just very small position sizing. For a bigger account, you just got to keep position sizing small because we can't afford to be risking the farm, for just one trade. It doesn't make any sense. So risk management is very important. All right, guys, that's pretty much it for this video. You guys basically just saw me flounder doing this, but we got through it. Life is good, and we successfully rolled a put credit spread. All right. So if you guys want to join the school community, again, link is in the pinned comment. $19 a month, get access to me, access to other community members. Everyone's really good about helping each other out, answering people's questions. We're going to be rolling out a exclusive course for the community pretty soon, and it's a good time there. Isolation is the #1 fastest way to kill your goals and dreams. You don't really want to be isolated, especially if you're in a new path, if you're working on something new, nobody around you most likely is into trading. So it's nice to be able to be a part of a community where you can, grow together and make money together and ask questions together and, all these things. So community is very important, especially during our live calls, because people can just ask questions and you're seeing live trades, and nothing is more valuable than seeing it in action and being able to ask and get that direct feedback on really anything. So yeah, join with the pinned comment. Would love to see you there. And yeah, once again, this is not financial advice. It's for entertainment, educational purposes, trying to teach a skill, something that nobody can ever take away from you. So that's the goal, teaching a skill and a craft and a thought process and a mindset to hopefully build wealth. And yeah, so hopefully this video helped you. And yeah, we'll see you in the next video. All right, thank you so much for watching.